For investors who are really looking for stability in their portfolio, finding a company that consistently increases its dividend is, it's kind of like finding treasure. Today we're going to do a deep dive into one of those very companies, Inabata & Co., stock code 8098. Let's unpack how they became a sort of benchmark for dividend-focused investors and what that could mean for you.
But what really separates a company that just talks about shareholder returns from one that is genuinely committed to it? What is the actual proof of that promise made to investors? That's the core question we're going to answer today.
So first up, what kind of company is Inabata & Co. anyway? Well, to really get why they're so attractive to investors, we need to look at a very specific and very powerful policy that sits right at the heart of their philosophy.
And that policy is the progressive dividend. Now, this sounds fancy, but it's a simple and incredibly heavy promise. It means the company pledges to either maintain or increase its dividend every single year. The most important part? They won't cut it. No dividend cuts. It's not just a goal, it's a clear signal that shareholder returns are a top priority.
Okay, but you might be thinking, a promise is just words, right? So where's the proof? To check that out, let's look directly at the company's official disclosure, their securities report, to see exactly how this promise is written down in black and white.
Here it is, a direct quote from that report. And what's so powerful here is the wording. This isn't some vague corporate jargon. By stating that the previous fiscal year's dividend per share will be the minimum, they're setting a hard floor for themselves. This isn't just an ambition, it's established as a fundamental company policy.
On top of that, they're targeting a total shareholder return ratio, that's how much of their profit they give back to shareholders, of around 50%. I mean, think about that. That means roughly half of their profits are planned to go directly back into shareholders' pockets, either through that progressive dividend or through share buybacks. It really solidifies their commitment.
But here's the big question. Can they actually afford to keep such a bold promise? At the end of the day, any policy is meaningless without the financial muscle to back it up. So let's dig into the numbers that make this dividend promise credible.
This right here is the financial engine that drives that promise. Just look at the trend from 2021. Sales have grown steadily, and ordinary profit has shown strong growth right alongside it. And yeah, there's a slight dip in the profit forecast for 2025, but you can see that the baseline itself is at a much higher level than just a few years ago. This is the kind of consistent, high-level performance needed to confidently support that ever-growing dividend.
Okay, so where do all these sales and profits actually come from? To really understand the stability behind these numbers, we need to look at the engine of their growth, what Inabata & Co. actually does. The company operates across 4 diverse segments. You've got the high-tech information electronics side, dealing with things like display and semiconductor materials. Then there are core industries like chemicals and plastics, and they even cover the life industry, which includes pharmaceuticals and food. This diversification acts as a natural hedge. If one sector faces headwinds, the others can provide stability.
And to really get a feel for the scale here, just look at the plastics segment. A whopping 63% of the entire workforce is dedicated to this area. This isn't just some side business. The plastics division is a massive foundation for the company, and it really speaks to their deep presence in these fundamental industries.
All right, so we've seen their promise and the performance that backs it up. But what about the future? Let's take a look at their official midterm management plan to see where they're headed. And just as importantly, we'll check out what risks they're keeping an eye on. Their plan, called New Challenge 2026, sets some ambitious goals. They're aiming for sales approaching 1 trillion yen and a return on equity, or ROE, of over 10%. For investors, this is a clear roadmap showing the company isn't just maintaining the status quo, they're actively trying to grow the business. And that growth is the key to sustaining that progressive dividend long into the future.
Of course, no investment is without risk. The company itself acknowledges a few key areas to watch. Because they operate globally, they're exposed to risks from overseas activities and currency fluctuations. And like any major trading company, they face credit risk from their vast network of business partners. It's important to note that they're aware of these factors and are actively managing them.
So, after looking at their policies, their performance, their business, and their future plans, what's the core message for us as individual investors? Let's tie it all together.
Here's the key takeaway. Inabata & Co. isn't just a company that happens to have a good dividend history. It's a company with a clearly stated, written policy to never cut the dividend and to continuously increase it. And that bold promise is powerfully supported by years of stable, diversified, and growing financial results.
So, with all that in mind, I want to leave you with one final thought. In today's volatile markets, does your own investment portfolio have enough of this kind of promised stability, the kind that's backed up by a clear policy? It's a question that really gets to the heart of building a resilient portfolio for the future.